that. So before we get into Groupon, let's do a review. We'll do a few things. The first thing we'll do is talk about the current portfolio we have. Then I'm going to do some review of a couple new topics, and then we'll get into Groupon. That'll be the schedule. So anyway, I made some decisions without the investment committee. I trust that that's okay, given that it's my money. But you guys might notice that Microsoft is our biggest long. And one of the things that is important to realize in investing is that, take a look here. We have 2.5% of our portfolio in Microsoft and 2.1% in RealPage. We actually probably have more risk in RealPage than we do in Microsoft, even though we have slightly more money. We have $5,000 more, $25,000 in Microsoft and $20,000 in RealPage. RealPage probably, whether or not its beta or its correlation coefficient to the market is that high, we all know that Microsoft has a little bit more diversification and security than RealPage, and certainly Stamps.com. So these two positions are sort of mid-cap stocks. We think about that in factor analysis, and we'll maybe talk about that some other time. But they're all sort of tech stocks as well, so they share a little bit of factor there. But mid-cap stocks behave a certain way, and large-cap stocks, Microsoft is the very largest cap stock, one of the biggest companies in the world. It's going to behave a totally different way. So I don't think about this Microsoft position as our biggest investment, even though it technically is. It's probably equivalent to a 1% position in a smaller mid-cap stock, so keep that in mind. We bought RealPage. I don't expect returns quickly, neither should you. We did get a big surprise with Stamps.com. There was a Seeking Alpha article. Seeking Alpha is a website where anyone can publish their, anyone can sort of publish their analysis. And here this fellow wrote, Stamps.com, a lousy piece of shit. Very funny. This sent the stock down. I think that the stock will recover. I actually am debating asking this investment committee to buy more to double our position. We'll take a vote at the end. I think it's a good idea. And basically the article alleges that there are these investigations for false and misleading advertising practices. So these are all public judgments, and lawsuits are all public. So the same way this guy found them is the same way that anyone could have found them. So, and I think most of the world had been, this stuff had been known to the world. This person just doesn't like Stamps.com, I think, and is trying to leverage some news into a thesis. For instance, here the company says that he loves, the writer loves this phrase, which is Stamps.com admits that its business model has no reason to exist. So this is a bit silly, right? We all know that you can get the same service on USPS.com, but that's like saying there's no reason for TurboTax to exist. TurboTax is a very valuable piece of software, and Intuit is a very large and successful company. But you can file your own taxes without it. And I think that that's the good analogy. I mean, just because you can use USPS.com, well, you can use IRS.gov and file your taxes for free. And it's kind of, only a sucker would ever knowingly pay for a Stamps.com account. Well, then by the same token, Intuit should be completely worthless, right? And Intuit is not completely worthless. In fact, Intuit is worth $25 billion. So I think it's a little silly, kind of short-sighted analysis. And in terms of the links, I actually read the judgments and things like that. Governments will come after companies for all kinds of reasons, and the free trial, the fact that the free trial, doesn't, the fact that they got a free trial offer, I guess, that was investigated, and it was a little too aggressive in that it converted from a free trial to an actual subscription account, I think is a little silly. That thing, those kinds of things tend to happen, and I don't think it's a big deal. In terms of the churn rate not being disclosed anymore, I don't think that's relevant. If you look at this comment, it's funny. Their scammy shenanigans are reported online. I'm only driven to try them because the USPS website is itself non-functional when it comes to buying postage. That's true. I tried to buy stamps on USPS.com and it didn't go very well. So I think there's a reason the company is doing well. This article didn't scare me. It didn't have any new news. It didn't have any relevant news. I don't think it's a... I haven't met one company that doesn't have a free trial kind of offer that doesn't auto-convert and is a little bit aggressive. That's not atypical. So it didn't bother me, and I'm gonna double our position as long as my committee is okay with that. So I shorted 2 stocks. I bought some Facebook. I think that they are in the early innings of monetizing their user base, and this could be a double or a triple. It is a very large cap stock, so it's just something to keep in mind. Seeking alpha is seeking alpha. It's not a big deal. And so I shorted Netflix and I shorted Apple. So I think Netflix has a profitability problem. They have all the scale that they're ever going to get, and they still can't turn a profit. And I think that's pretty dangerous. I mean, they not only can't turn a profit, but they lose $1 billion a year, which for a $40 billion company is really remarkable. Apple I'm short because I think that if you look at the numbers, they had a really bad quarter where it was remarkable how quickly the iPhone is becoming out of fashion, and the deleveraging that'll happen to Apple will I think be pretty punitive. So that's kind of where I am with that. So yeah, I think we'll double our Stamps.com position. I think we'll probably make a position in Groupon as well. We'll talk about that in a minute. All right. So that's it for the portfolio. We have 11% gross exposure, so only 11% of our money is currently in the market. It's a $1 million tech portfolio. We have, like I said, about $100,000 invested. The net exposure is only 4%. You guys know that I like to have a market neutral portfolio. I don't think markets go up over time, so I want just as much longs as I want shorts. All right. So let's keep moving on here. Let's go to the PowerPoint. So the first thing I want to talk about is PE ratios, and this is sort of a pet peeve of mine. I think it's one of the first things that young investors learn, and many people don't grow out of it. And even professional investors talk about PE ratios way too much. And PE ratios are basically useless. And anytime you hear someone talking about PE ratios, you should just sort of nod your head and smile and kind of assume that anything this person's saying is likely to be not too valuable. PE ratios are a quotient. Basically, it's price divided by earnings. And this can be useful if you have, it's sort of a useful concept. And you can, instead of a PE ratio, you can think of it as a payback period, right? Like in a bond,